Welcome to Atlanta Community Profiles, a show about living in Atlanta. Atlanta Community Profiles is hosted by Lou Whelan, who will talk to experts who know this ever-changing city and its real estate industry. We'll talk to mayors, community leaders, and residential real estate experts. Now, here's Lou Whelan with this week's Atlanta Community Profiles.
Hello there and welcome to our show. My name is Lou Whelan. I publish the official relocation magazines on Atlanta that are distributed by the First Multiple Listing Service of Atlanta. We've been publishing these for 24 years. We have one for North Fulton in partnership with the North Fulton Chamber of Commerce, one for Cobb County in partnership with the Cobb Association of Realtors, one for Atlanta metro area distributed by FMLS, one for Gwinnett in partnership with the Gwinnett Chamber, and one for Inside 285. They are available at all real estate brokerage firms and chambers of commerce, and they're also on my website, AtlantaCommunityProfiles.com. I'm also a realtor with Berkshire Hathaway Home Services, Georgia Properties, and I specialize primarily in multifamily housing and real estate and restaurants. So if I can help you, my website is louwhelan.com. Love to be of service to you. And basically, every week we interview community leaders, people who are contributing to the well-being of our great city. And today we have such a distinguished guest on the show, Michael Sims. Welcome to the show, Michael.
Thank you, Lou. I appreciate that.
Great to have you on the show, first-time guest. Michael is the Executive Vice President of the Vinings Bank as the manager of their new Alpharetta office.
That's
and
right.
I had the privilege of attending your open house a couple weeks ago.
Thank you for coming.
And what a beautiful facility you have there right on North Point Parkway. Very easy to access across the street from my favorite restaurant, which is Sweet Tomatoes.
There you
I can
go.
walk over there and have lunch over there.
That's right.
Periodically for healthy food.
That's right.
And unfortunately, Michael did graduate from the University of Alabama. But he did redeem himself by getting an MBA from Stanford University.
That's right. Yeah.
So
no formal education in the undergraduate.
Right.
Right.
But you made up for it.
At least
sure.
somewhat. That's right. Some might argue no.
So, but you have a good football team. I heard something about
That's
your
right.
football team at least.
They've had some success recently.
Yeah, a little bit. Yeah, that's pretty good stuff. So basically. Executive Vice President with banking at Vinings Bank. His background includes knowledge about portfolio management, risk management, commercial lending, banking and credit analysis, business development as a professional with giving advice. We're going to talk about that, mentoring people, as an MBA from Stanford, as I mentioned. So definitely very qualified to lead Vinings Bank, and you've worked for some other banks as well, including SunTrust.
I have, yes, sir.
State Bank, right?
State Bank, that's right. Yes,
and so basically, you went to Virgil Grissom High School, living in Johns Creek, from Willsboro, New Jersey. Where's Willsboro?
actually Willingboro, New Jersey. Yeah. It's middle of the state, right outside of Philadelphia in New Jersey.
Okay.
The big claim to fame there is a guy who was a famous track and field star and won in the Olympics and long jump and all that kind of stuff. That's about it from Willingboro. There's nothing else there.
Well, I've lived in Middletown for a long time.
Is that
commuted
right?
into Manhattan.
Oh, okay.
For many
Yeah.
years. And I'm glad to move to Atlanta.
Yeah. Fort Dix area, so if that makes any difference. The Morristown area.
Oh, yeah.
Yeah.
Okay.
Down's the middle of the state.
Yeah, okay. That's nice. There's some nice lakes out there, too.
They do, that's right.
Lake Mohawk, isn't it?
I think that's right.
Something like that.
Yeah.
So the Atlanta Business Chronicle, a couple of years ago, in referring to Vinings Bank, it's always nice to be called the best of the best, in referring to Vinings Bank. And basically, let's ask you this question. I was going to go over some of the demos or specifics about your bank, such as the fact that you've been in, but you started in July of 2007.
That's correct.
What an ominous time to open a bank,
That's
a community
right.
bank.
That's right.
You have 38 employees at this time, roughly, and you're managing how many, 300 million in assets.
That's exactly right. Yes, sir.
And you have 250 business clients.
That's right.
And you have a 5-star rating from Bauer Financial.
We do.
So now you've opened a second location.
That's right.
And because of your obviously success in the Cobb County location.
Correct.
Both locations all banks are beautiful buildings. And so basically, tell me, Les, how would you define a community bank?
Yeah, that's an interesting question, Lou. A lot of folks will go straight to asset size. So most banks that are under $1 billion in assets may decide to say that they're a community bank, if you will. Mm-hmm. And then as you move up the spectrum from 1 to 5 billion, you'll have some banks in that group that will also say, yeah, we're a community bank as well. And maybe even some that are bigger than that, 10 billion, 15 billion, et cetera. And I think the attraction there is that regardless of the size of the institution, it's the way in which you practice banking that I think is the true definition of community bank. And I think that's what you see with Vinings Bank. We pride ourselves, as you and I were talking earlier, about that relationship building aspect of banking, which, for better or for worse, as banks get larger and larger, it's very difficult to maintain that. Just from a regulatory environment perspective, scale, systems, processes, people, policy, etc., sometimes get in the way of allowing you to develop that deep relationship with your client out there. And community banks, I think, have an advantage in that regard. They want to be a little bit different in the way in which the relationships are managed with that particular client. I think I shared with you earlier, as you get up in scale, larger institutions, because of the infrastructure that they have in place, they're going to ask their bankers to manage a large number of, or a large portfolio or a large number of clients because they need the throughput and the efficiency ratios associated with that. From a community bank, not that we're not focused on efficiency and making good money for our shareholders, but we don't have to have 150 or 200 clients per banker. We can have 35 to 50 or so and be much deeper in our relationship with those particular clients. And it also makes that relationship much more sticky than it does if you're with a larger institution. And as an example, you may be one of 150 clients. You're a number in that kind of institution. So I think the big definition on the community banking side is about how the bank approaches the client relationship and approaches the market. Are they truly part of the fabric of that community? Are the decisions that are made locally by the folks that are the bankers in that particular market? And I think that's harder for larger institutions to do that because, a lot of times for us in Atlanta, you're going to find a lot of banks that are not headquartered here that have bricks and mortar, et cetera, across the footprint.
Now, do you do primarily business banking or residential? What's the breakdown?
Yeah, great question. We're about 95% of what we do from a business perspective, banking perspective, is focused on that small to medium sized business owner.
Business. And now, do you handle their residential accounts, or do you not, or do you refer them to other banks?
No, we're a full service bank, so we'll handle all of their personal banking relationships if they need. If they need a mortgage, we can do all of that, home equity line, et cetera. So we have all of the consumer products out there that are necessary to have a full banking relationship with that business owner. But where our skill set lie is in the be able to bank their core operating business.
Mm-hmm. Well, I believe I saw on your website that you're the only community bank in the state of Georgia, the entire state.
In the state, actually in Cobb County.
In the Cobb County?
That's right, yeah. When First Landmark was purchased most recently by a bank out of Birmingham, we became the last community bank chartered in Cobb County.
Okay.
Yeah.
But then, and are there other community banks in
Metro Atlanta?
Fulton County?
Yeah, you'll find not as many as there used to be. I'll give you some stats on some numbers whenever I want to talk about what the community banks and what they look like. But there are a handful of community banks that are still around out there.
Mm-hmm. Now, in 2007, I think, or 2008, most community banks disappeared.
They did. Yeah,
but you're going away from the trend. You started your bank at that time when everybody else was going out of business.
Yeah, it was Vinings Bank. Dan Oliver, who's the CEO, Clark Hungerford, who's our chief credit officer, and Todd Mankin, our CFO, raised $20 million in equity in 2006, 2007 timeframe, and got the second to the last charter that was issued in the state of Georgia before, as you suggested a few minutes ago, everything kind of went to hell in a handbasket. The bank survived and thrived, and today, as you were referencing a few minutes ago, have been a top performing bank for the last 6 years in a row. And by top performing, we are in the top 15% of all banks, all sizes, from a nation perspective.
Okay, stay tuned. We'll be right back after the break. Welcome back. I'm sitting here with Mike Sims, who is the Executive Vice President of the Vinings Bank and manager of their new location in Alpharetta. And we're talking a little bit about community banking and how they might be different from the bigger worldwide, nationwide banks such as Bank of America and so forth. And how would you say that more of a personal kind of a relationship that you offer versus some of the bigger banks that we've all experienced?
Yeah. I don't think the larger institutions, if you went and asked their leadership team, they would tell you that they're all absolutely about personal relationships. I just think, in my personal experience, having been with a number of those larger institutions here in the Atlanta market, as you gain scale, it becomes more and more difficult to have that one-on-one personal relationship, in particular with that small to medium-sized business owner. And so it's not that they don't want that. I just think that it's a function of scale that makes it more difficult. And a lot of the small to I find from my client base, the small to medium-sized business owners out there really are seeking advice from experienced bankers who, like myself, have been there, done that, and have a couple of T-shirts to be able to help them navigate uncertain credit markets, uncertain business environments, etc. And so I think that's the primary difference, quite honestly, between some of the larger institutions and the community banks, is just the approach that the community banks want to take, in particular Vinings Bank, with their client base.
I believe I saw on your website that all of your bankers have at least 20 years of experience.
They do. That's exactly right. So if you think about that, I think that plays out in the relationship with that client. Most of the folks that are on our staff today, and in particular the ones that are joining me out in North Fulton on North Point Parkway, all have 25 plus years of banking experience, and all of them have been with larger institutions. So they've been trained very well. They know banking very well, but they want to practice it in a different manner. Again, with the larger institutions, because of their need for efficiency and effectiveness, much of what they're going to bring to bear in their client needs to be in a cookie cutter type of format, because that allows them to have throughput. The faster things go through, the more money we make, the more efficiency we have, et cetera. Community banks, again, not that we're not focused on efficiency and making money, but our difference is I don't want it to be a cookie cutter solution. I want to customize something that makes sense for your business and also makes sense for the bank as well. So that's that mutual partnership. And so all of the folks that are joining me out in North Fulton have that experience and like to what I call practice banking. We don't have to check our brains when we come into the office every day. They want us to use our brains to help our clients and help figure out issues that they're facing, troubles that they've got inside their business, and we want to be able to add value to that relationship.
Yeah, that's a valuable asset to be able to add value, right. And not many bankers can actually add value. A lot of them are right out of school or
Right.
certainly within a few years of graduation
Right.
or working in there. And
Right.
so one thing I would like to just touch on one thing before we start talking about what I really want to talk about is mentorship
Sure.
of business leaders. But you mentioned that the bank, and I saw on your website and did some research, your bank is extremely financially stable.
It is.
And why? Tell us about that, and why is that so important?
Well, safety and soundness is first and foremost. So if you as a client are going to be kind enough to put your deposits with me, you need to make sure that I'm going to be around tomorrow just in case you want those deposits back. Mm-hmm. So first and foremost, safety and soundness. And our leadership team directs and facilitates the operations of the bank to ensure that that's the case. And by doing that, you do that a number of different ways. The way in which you construct your balance sheet, so our balance sheet as a bank, what you will not find is a balance sheet that is overly leveraged. So we have a lot of liquidity. Liquidity is good. If there's an issue in the marketplace and my client needs to come to me and get their money back, I've got the money. And so there are a lot of institutions out there who leverage their balance sheets. They're trying to make money, that's perfectly fine. But we've taken a path that we want to make sure that we're here for the long haul. So we joke quite frequently that we consider this to be a marathon and not a sprint. Mm-hmm. And so we've positioned our bank from a financial security perspective to reflect that.
Mm-hmm. So now that what we really want to talk about is why. I mean, we understand that your people have a lot of experience, 20, 25 years, and
right.
They really, in the process of getting that experience, they certainly have learned a lot about business, operating a business.
Sure.
And nothing more important about operating a business than the financial stability and good financial accounting.
Mm-hmm.
And what some of the experiences that you've learned that you might pass along to business leaders that would be helpful to them in managing their money?
Yeah. Well, I think you hit on a couple of them there as you were walking us into this conversation. And getting good advice and having good advisors that you trust around you, and that certainly would take the form of having good legal advice. How am I going to construct my business, and how am I going to structure it? Couple that with good accounting advice. So if I structure it like this and I'm going to run it like this, then what kind of tax implications are associated with that, and how do I want to manage the processes inside of that part of my business? And then I think finally you need the banking advice. And so, that's where me and my folks come in, and we're able to help you think about what is a bank looking for that you might need from a debt provider. Should you ever need to get into a debt relationship, working on whether you need equipment, expansion, need an owner-occupied building, etc. And so what my folks and I try to do is to make sure that all three of those advisors are working in sync with what you're trying to accomplish from a business owner perspective. And quite honestly, I think the biggest thing that I've learned over time is those three partnerships, to include the business in the middle, get out of sync with what they're trying to accomplish. And maybe the accounting person says, well, listen, I want to minimize tax, right? I want to minimize tax for your business. Okay, well, that means you're not going to leave anything in the business. Okay. Well, those are ramifications for the banker, because the banker's wanting you to make sure that you're putting money back into the business, so you're creating equity and value and worth in your business. And those strategies can get misaligned and in some cases make your business non-bankable, because the profile of the bank or of the business, because of the strategy that you've employed on the tax side, makes you look as though you don't have anything inside your business. And it's very hard for a banker to get comfortable with the fact that I'm lending to a business that has nothing in it, if that makes sense.
Mm-hmm. I can relate to that very much. I mean, I consider that, believe me, I relate to 100%.
Yeah, and at the same time, you don't want to leave all the money in the business and pay Uncle Sam an unfair share of your hard labor. So, to me, the conversation between your accountant and your banker and your legal structure all need to take place at the same time, so that you're adding value again to that business owner by helping them think about the options that they have in place, right? Mm-hmm. So there are always options with tax strategy, legal strategy, and then the banking strategy.
Well, as a small business owner, I know exactly that one of the big goals is minimizing taxes.
Sure.
But I know exactly what you mean. There are things that you can do to minimize taxes.
That's right.
Definitely strategies.
That's right. That's right.
Such as paying bills early,
That's right.
Ahead of time.
That's right.
And many other things too.
Right.
But anyway, we'll be right back after the break, and we're going to talk about other ideas and thoughts and ways to help you manage your business. So stay tuned. We'll be right back. Welcome back. I'm Lou Wieland, and I publish the official magazines about Atlanta that are distributed by the First Multiple Listing Service. And we're sitting here with Mike Sims, who's Executive Vice President of Vinings Bank, a leading community bank, if not the leading community bank in the metro area, maybe the state. And a lot of people are not familiar with even the term community bank, much less anything about what constitutes a community bank.
Right.
So let me just go into that a little bit more with you about some of the statistical perspectives on that.
Yeah, sure. Absolutely. I think maybe your listeners might really appreciate that. I was hit with these statistics probably 5 or so months or so ago, and I found them a little bit concerning and staggering, but let me give you some numbers. So if you think about the amount of currency, cash, that's in the marketplace today, it's somewhere around $19 trillion. Okay, so that's the amount of currency that we have whizzing around out there that's driving businesses and consumer purchases and whatnot. So 19 trillion. Of that 19 trillion, if you look at the larger institutions, larger financial institutions, about 65% of that 19 trillion is held by the largest 6 institutions in the United States. Go a little bit larger than that, and you take every institution that's $10 billion or bigger, and those are the big ones that we're talking about, the Chases and the Wells of the world. If you take the balance above $10 billion, they're going to have about 81 or 2% of that $19 trillion. If you add in the banks that are larger than $1 billion, so these are all banks that are larger than $1 billion, and today that's about 5,000 banks total, charter banks in the United States. They're going to have about 89% of that 19 trillion. Community banks, which are typically classified as less than $1 billion, they have about 6% of that $19 trillion out there. And so you might ask yourself, why is that important? Well, that $19 trillion is the deposit balances that banks can then turn around and use to lend to small businesses. Okay? So remember what I just said. 89% of that $19 trillion is focused and concentrated in those banks that are larger than $1 billion. Okay? And there's 5,000 of those. There's the banks that are under $1 billion. They provide 60% of all the lending activity to small businesses. So if you think about the ratio there, so 90% of all the deposits that are aggregated out there in the larger institutions that are available to lend to small to medium-sized businesses are held by the larger institutions. But 60% of the actual lending that is done by those banks that are smaller than $1 billion and have about 6% of that $19 trillion out there.
And how do you find small business? What size?
So for us, it would be really any business that has revenues up to about $75 million. So I call it small to medium sized business.
Small to medium.
Yeah.
Okay. So
The point there is that if you're a $20 million company or you're a $25 million, you don't have access to the capital markets in New York.
Mm-hmm.
Your capital provider has traditionally been that local community bank. Community banks, you can only lend the deposits that you have. And so as those deposits that are now being aggregated larger and larger and larger and larger percentages to the larger institutions, it will make it much more difficult for community banks to serve their purpose in being able to provide capital to those small to medium-sized businesses. So to me, if your listenership out there has got a question, it is, what happens as more and more of those deposits make their way into the larger institutions that are not focused on lending to those small to medium-sized businesses?
So most of the new jobs are created by small
business. Powered by
so
your
it's
community
a pretty powerful role that you play.
Exactly
in
right.
Of growth of the economy.
Yeah.
I saw something interesting on your website that your success is very intrinsically tied to the success of the local community.
No question.
Almost in every case on your website that you state that.
No question.
As the local community goes, so does the local community bank.
That's absolutely correct. No question about that.
So that's kind of nice to know that you're on the same page as we are.
That's right. That's exactly right. And that's that's exactly the intent. Yeah, you know that better than I think it's 80% of all jobs that are created in the United States are created by small businesses, right?
Mm-hmm. Yeah.
And then, the folks that are helping those small businesses along as they need capital to expand, to add new jobs or whatever the case may be, that primary funding source has been your community bank. Mm-hmm. And I think those of us that are in the community banking sphere are more and more concerned with aggregation of deposits that are going towards these larger institutions that are not part of your local community fabric.
Okay, stay tuned. We'll be right back after the break. I know. I know you will. I'm sure you will. I actually went to the University of Maryland.
Oh, Terrapin. Nice.
Yeah. Not in that dialogue there.
Yeah.
I have no axe to grind at all.
Maybe lacrosse or
my son went, lacrosse.
Basketball.
My son went to the University of Colorado.
Oh, cool.
And never came back.
That's a great campus.
He was out there in the mountains.
That's a great campus.
Yeah, it's beautiful.
Yeah, Boulder is cool.
In 3, 2, 1.
Welcome back. I'm Lou Wheeland. Sitting here with Mike Sims, Executive Vice President for Vinings Bank, and he manages their new Alpharetta office on North Point Parkway. And if you missed any of the show, it's on my website without commercials, AtlantaCommunityProfiles.com. And we're talking about community banks and community banking and some of the advantages that they offer. And we're also offering a pretty well-articulated definition of community banks. A lot of people may not be even familiar with that term. Mm-hmm. And now Mike asked that during the break if we could talk about football since he went to the University of Alabama, but unfortunately we don't have time to talk about the University of Alabama today. Maybe another decade or so we'll come back to that. But anyway, Mike, we'll have to talk about business, but commercial banking is basically your area of expertise. You are as a community banker, you are able to offer a lot of good advice, sound business advice to business leaders. And I've worked in corporate America for 22 years, and in my own business for that long or longer, actually. And it's radically different working in corporate America versus managing your own business. It's almost like worlds apart. What kind of advice do you give to people that are managing their own business about finance, financial analysis and financial perspective? What kind of advice would you give me or my producer over there? He's a millennial, so you might want to give him different advice.
I don't know. He may have it all figured out.
Yeah,
I think most of the millennials do these
They
days.
do.
Yeah.
Actually. What kind of advice would you give people in managing? What's the most important advice that you've given to people?
Yeah, I don't know if there's any one silver bullet out there, Lou. Again, you and I talked a little earlier about making sure you have a circle of really, really good advisors for you, both on the legal side, on the accounting side, on the banking side. And I think if you get those three legs kind of out of whack, they have a tendency to impact your business. Good, bad, or indifferent, but it will certainly have impact associated with it. I think the biggest thing that I see with small to medium size, even larger companies, commercial companies, is it's really more on the talent side with them individually. So as their business grows, and they're trying to add folks in skill set wise, what I see a lot of times in the breakdown in what they're trying to accomplish is they're spread way too thin inside of their business, and so they're trying to develop business, they're trying to build the business, they're trying to make sure the financial house is in order. They're trying to do all the HR stuff associated with running a business and maintaining a business. And then they're trying to think about strategy, what's next year look like, or et cetera, and going out and winning the business. And so, I see, having had the benefit of 30 plus years in the banking industry and spoken with a great number of entrepreneurs, the piece that I see that impacts them the most typically is where they're the chief cook and bottle washer for that particular entity, and it's very, very hard to maintain that, especially from a growth cycle perspective. And so, my counsel with folks when they come in and talk to me, and quite a bit, I do talk to them about that. Make sure you've got someone or a system in place that helps you on the HR side, because you can get into traps pretty quickly there with all the regulation we got going on, and in particular on the healthcare side. So make sure you got those good systems in place. I think that makes a great deal of sense. And then again, think about surrounding yourself with those advisors. One of the things that I've done for this North Fulton office is I've created a board of advisors, and so I have 12 business women and businessmen who are part of the community in North Point, on North Point Parkway, North Fulton, that I get together with on a quarterly basis, and I want them to help me with three things. One is, you know what banking should look like and feel like for you inside of your business, and I want you to assess us from a critical perspective, critical eye. Are we providing you what you need from a banking relationship perspective, and where can I get better as a banker, and where can we get better as a bank? Two, I want them to help connect themselves within each of them with their businesses so that they're expanding their reach and they're expanding their connections inside the marketplace. And then to do the same thing for me, I want them to help me reach out into the community to make sure that I'm touching the folks that I need to touch in the North Fulton market. And so I would advise someone who's on a small business owner, maybe think about putting in place an advisory board that helps you cast a critical eye and assess what you're doing inside your business from all realms. So get an attorney to sit in there, get you a CPA, get you a banker, sales strategist, etc., and then listen to them when they talk to you.
Mm-hmm. One thing that I did question that I had earlier, and I forgot to mention it, was the fact that the community banks lend disproportionately more money to small banks than the larger banks by a significant margin.
Right.
How does that bode well for the business owner? Does it give him a better opportunity at capital, or a better shot at capital, raising funds, and so forth? Tell me, how does that compute?
Yeah, it absolutely does, and that's in my mind, and hopefully it's not a biased perspective, but I'll give you an example. I spoke with an individual this morning, you and I talked about earlier, who had created 5 businesses previously, and he was in the throes of creating his 6th business. And he was banking with one of the larger institutions and was referred to me by a mutual friend. And he had already approached his larger institution about ways in which he could fund his new business, and got that cookie cutter type of approach that was not customized. And so I think the community banking approach, for us to be able to take the time, sit down with you, understand what you're trying to accomplish, and then customize a solution, gives that business owner a much better opportunity to put a financial program in place that makes sense for them than it does maybe with some of the larger institutions.
Stay tuned. We'll be right back. Welcome back. I'm sitting here with Mike Sims, who's graduated from the University of Alabama and then went on to get an education at the, the University of Stanford.
That's right.
So anyway,
Made up for those sins.
really. So, but anyway, what we're talking about commercial banking for the small business owner, small businesses, and small business can be defined as anybody up to $75 million in annual sales. And one of the things that I am getting out of this conversation is the value of mentorship that you afford versus the bigger banks that you might deal with. And I can value that a lot, because as a small business owner, you don't have a lot of people to get advice from. you know?
Sure. Right.
Whereas in a big company, you have a lot of people that have a lot of different. So it's very important to have that special relationship with the banker, because he, in your case, where you have so much skill and experience.
That's a nice way of saying I'm older, right, Lou?
I wish I were your age. But anyway, just looking at the horizon in Atlanta, what kind of industries do you see as particularly promising?
Yeah, well, technology. I mean, it's first, foremost. That's one of the reasons why we chose North Fulton as our second location for Vinings Bank out there on North Point Parkway. We just see this explosion up and down that 400 corridor. And not that it's driven by technology, but almost every discipline or sector that I am bang up against from a small business owner perspective has some sort of technology connection to it out there. And so I think technology will drive the future of Atlanta. It's always going to be a real estate market. There's no question about that, whether it be commercial or residential. And we'll live by it one day and die by it the next day and whatnot, as you're very much aware. But I think Atlanta's ability, especially with Georgia Tech and Georgia State and all of the learning, University of Georgia here and present in and around the Atlanta MSA, that having that technology skill set and being able to attract those companies to Atlanta is key. And I think that's what will drive us in the economy going forward.
Tell us, what kind of advice would you give to real estate investors? From small to large in Atlanta.
Right. So as soon as I give you advice, you need to just do the exact opposite, right? So, I was in here in the banking space during the 2007 to 2014 timeframe, and so I lived it just like everybody else. And the banks were in and amongst all of the things that were going on, and they were certainly culpable in some of the outcomes that took place in the real estate market. But Atlanta, as I look out into the marketplace today, I see certain sectors of that remind me of the 2006, 2007, 2008 timeframe from a price point perspective, price per square foot perspective, et cetera. And so, our institution is mindful of that. We're being very judicious about where we're getting involved in projects and size of the projects, et cetera. Just because we're convinced that business. Well, I know this for certainty. Business cycles will never stop. Mm-hmm. We will have another business cycle here in Atlanta, and because we are a real estate driven city, that sector will be impacted. Now,
where are we on the cycle now? Are we halfway up or halfway down or at the top?
Yeah,
where are we?
Yeah, I honestly think that we're already starting to see some of the movement down the cycle.
Already hit the top.
I think so. Yeah.
I'm sorry to hear that.
Yeah, I understand. Certain sectors I think are really good, but there's certain that I see the same pattern that we had when 2007. Time frame.
Great having you on the show, Mark.
Thank you. I appreciate your time.
Appreciate your coming on the show. Executive Vice President of Vinings Bank, Manager of the Alpharetta office. Stop in and say hello, and I know he'd love to meet you.
I'd like that a lot, please. Thank you.
And your website is?
Yeah, www.viningsbank.com.
Viningsbank.com.
Viningsbank.com.
Thanks for coming on the show. Have a nice day.